So we fell back to trend on ES, got a bounce, still a lower high. See what happens with that in the overnight, but we have PPI tomorrow morning, which is, currently priced at being rather soft, but I don't know, maybe if it's hot, it doesn't even matter because Trump's just going to cook the books next month. And so maybe inflation's just irrelevant now. I guess we'll find out. Dollar down today, yields broadly down across, well, from like the 2 year out to the 30, uh, pretty steeply, but also like the short paper. Correlation up, almost back near like the July 30th high on the 1 month correlation. So still a lot of dispersion. 3 month correlation, well over that level. So we are seeing short vol move in further out on the chain. Uh, Commodities, I guess not really doing anything super fun today. Silver's up a bunch. Oil down a little. Boring. Um, Bond volatility continues to drop. I think it's at the lowest levels in several years now. Yeah, bond volatility at the lowest level since like Jan of 2022, which is right about where we were before the Fed cut rates or raised rates. Carry trade leverage falling off on the top and the back ends. Forward yield on volatility is just fucked up because VX contract rolled last night, but that'll right itself. Probably still somewhere around like -7%. I don't know how to get the contract roll out of that, and it doesn't matter. Out of the money put demand had picked up a little bit yesterday. I don't think we got a lot more of that today. A little bit of a push out, but breadth is still fairly narrow. Um, Interesting. Correlation with VIX, cash VIX, pretty flat today. So not a lot of vol shorting, surprisingly. Um, Kind of leveling out. Be interesting to see if that starts to turn up into the back half of the week. Today's the first day of SLD, but it continues out into Monday. Fed fund futures pricing in more rate cuts across the board. So Jan, March, June, all moving up. A little bit closer to like their July highs. Almost two rate cuts priced in by the end of 2025, and then two more cuts getting priced into the first half of 2024. Bear steepener, pretty flat. So not really a lot of steepening. And we broke out above the 2022 trend, which we tested yesterday, but pretty flat on the day. So yeah, this could still fail. I guess we'll see what happens with that tomorrow. And that's about it. Tech not really outperforming today, but it does look like we're getting some defensives rotation. Consumer services picked up. Health tech running pretty hard. Lilly up 3%. See some like move into energy minerals, consumer non-durables, commercial services, health services, process industries doing well, utilities up. So this could be a little bit of like de-risking prior to OPEX. We'll see if that manifests into any actual sell-off tomorrow, but maybe not. And that's what I got for you guys. PPI is going to be important tomorrow, and I guess I can explain why. Although I'm going to write this later tonight. Um, Currently, CPI is up. If you saw what I tweeted last night, none of the other countries are paying tariffs right now. And so, even though there's a delay on the larger Chinese tariffs, there are still like 25 to 30% tariffs in effect against China currently. And so, none of our import partners are currently paying more money on imports, which means either consumers or producers are eating that inflation. And we see a small bump in CPI, but we've seen producer prices rising steadily for the last several months. Now, there was inventory front loading, which did help stave off some of the inflationary pressures from that. But not all inventories are durable, and many of them do have some kind of rollover. And as those inventories are starting to roll over, we're probably going to start to see more price pressure on producers. And the question is how efficiently can producers pass those prices forward to consumers? How willing are they to? Remember that consumer sentiment is not back to where it was in January of even this year or December of last year, where consumer sentiment kind of topped out. And so if consumer sentiment is low, it becomes a lot harder to pass forward pricing without further eroding market share. And then if producers are absorbing the costs, that's going to reduce net margins pretty much across the board in almost any industry that's reliant on imports, which is basically all of them, with the exception of some tech services. But even those are still reliant on some of that, and they, if costs go up, they need to pay their employees more, otherwise they're going to lose talent. There's no way of avoiding it, regardless of what sector you're in. And so if PPI is also up tomorrow, especially if it's above analyst estimates, the presumption is going to be that producers are currently eating tariff costs, and how much those tariff costs are up is going to be fairly significant, and for how we are pricing Fed rate cuts right now. Right now, we're assuming that CPI, PPI are going to be pretty flat. We're pricing in, like 4 rate cuts over the next 2 halves, um, with 2 of those rate cuts being before the end of this year. And if we're getting a pretty persistent uptrend in producer pricing, then margins are going to have to contract, and equities are going to need to be repriced, as are Fed fund futures, because despite the slight weakness observed in the labor market, um, the Fed still can't really justify cutting if inflation is moving up, especially if it's significantly above their target range, unless they're going to adjust their baseline to 3%. So I think the PPI print is pretty important. I think we're kind of, yesterday and today, I think we're just kind of climbing the wall of worry into that print. And then also import export prices on Friday, University of Michigan data on Friday. We've got event vol, which also creates a little bit of risk. Yeah, they're eating it for now, but they will have to pass the cost forward, of course. But in doing that, they can weaken their market share, and that can give their competitors who are willing to eat the costs an edge. So in highly competitive markets, this is very dangerous. For monopolies, not so bad. And those do make up like 30% of the SPX, just not all of it. Numbers aren't cooked tomorrow. The new BLS head doesn't come in until he's confirmed by the Senate, which at the earliest is still a month out. So it may be even that next month's numbers don't have time to be cooked either. I assume what they're going to try to do is rush his approval by the Senate, and then he's going to come in and cancel the monthly inflation reports and move to quarterly, and that gives them time to cook the books. What's up with the IWM squeeze? Everyone's like just super short IWM. And IWM benefits from a looser credit environment, which is what's being priced in by pricing in more Fed cuts. Although the last time the Fed cut a couple times, the credit environment got very, very tight very quickly. Which would likely be the effect again this time, because if the Fed cuts, inflation is going to go up, and then they no longer have any downward pressure on inflation, and inflation will go up rapidly. What do you think PPI will be tomorrow? I think the mid estimates for PPI are already like 0.3% per month or month over month. Point two point yeah, point two for headline core. I would say that point three is probably possible on core. Headline core, CPI core was up point three. So yeah, I wouldn't be surprised. Also, if jobless claims fall tomorrow, that could have a negative effect. Also, like initial jobless claims drop off. They're expected to rise slightly, but continuing jobless claims are have a pretty wide expected range. But I think core PPI is expected to move somewhere between 2.7 and 2.9. And yeah, I mean, it's if core PPI up 0.3, I think headline and core, like if it's like 0.2, 0.3, maybe down like yeah, like 1%, maybe 2%. I think that would be pretty bad, because that would, I think 0.3 puts core year over year at 3.0, or like 0.32 puts core year over year at 3.0. So we'll see how it pans out, but I'll write up a little bit more on it tonight. Thanks, guys. Later.